Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. Joining me on the show today is Vatsal Shah from Sushil Finance. Vatsal, thanks again for joining us. Let's go straight to the first caller. Mahesh Sharma is on the line from Jodhpur. Good afternoon, Mahesh ji. What's your query?
Sir, I have invested lump sum amount of rupees 4 lakh in Tata Equity P Fund.
Okay.
Besides this, I have several SIPs in which I am investing in for the last 10 years.
Very good. Okay.
And further, I want to start SIP in Mirai Asset Emerging Blue Chip Fund with the SIP amount of rupees 2,000.
Okay.
For long term.
Okay.
So would you please kindly advise me to whether my fund in which I have invested rupees 4 lakh, that is Tata Equity P Fund, is it the right fund, or Mirai Asset Fund in which I want to start? What will be the your suggestion?
Right. Vatsal ji.
Yeah. So, Mr. Sharma, basically Tata Equity P Fund now falls under the value fund category after the recategorization of SEBI. In today's market, a value fund is definitely a good fund to stay invested in, and it has always also been more on the value oriented stocks rather than growth stocks. So I would suggest that it's a good fund. You can continue to hold it. You can also evaluate that whenever the market corrects, you can keep adding to that fund. So rather than just doing lump sum one time and forgetting about it, you can keep adding whenever the market is correcting. Your second question about investing in SIP of 2000 in Mirai Asset Emerging. So Mirai Asset, as actually Emerging Blue Chip, is one of the most consistent large cap funds in the space, and it has done very well. I would suggest that you can even look at increasing the amount if you plan it well, because I wouldn't know your other SIPs whether 2000 is right or wrong, but it's a good fund to go ahead with.
Okay, good fun to go ahead. All the best, Mahesh, with your investments. Ajay Sharma from Delhi has mailed us his query. He's 52 years and he's been investing through SIP for the last 5 years in IDBI India Top 100 Equity Fund. He says he doesn't need the money now and wants to know if he should continue investing in this fund or switch.
Yeah. Ajay, regarding your investment in IDBI Top 100, so the fund is actually, it has performed very well last few years. What I would suggest is that it is not a very consistent fund. So if you are making money on that, I think you can consider booking profit. Again, considering that the index has actually run up so much, so there are chances that the index will cool off. So with the index selected stock, so that could actually mean that you can do some profit booking at this point in time.
This is an index based stock.
But it will be a large cap oriented fund, and it has more heavy weight onto the Reliances and the TCS of the.
But good portfolio correction.
Portfolio correction is good, but it has moved up very fast in the last 1 year. So considering that, I think every fund has a good time and a consolidation time.
Okay.
So if he's in profits, he should consider booking profits.
Okay.
And then moving into a more mid cap and multi cap, because now the valuation in mid cap has become more attractive.
Okay.
So that kind of restructuring he can look at.
Right. The next caller, Ananya Mohile. Good afternoon, Ananya. What's your query?
Hello.
Hello. Good afternoon, Ananya. Boliye.
Yeah. I just my query was regarding the. I'm a government employee, and presently I am remunerating around 30,000 rupees in my provident fund.
Okay.
As well as I am investing 16,000 rupees into mutual funds through SIP.
Okay.
In which I have got around 9,000 I am investing in UTI, which is in mid cap, master share, and equity. And 5,000 in ABSL growth, pure value, and 2,000 in HDFC mutual fund.
Okay.
So my question was regarding that should I deduct reduce my TS subscriptions to get more aggressive into mutual funds, being wealth creation as my objective,
Okay.
or is it okay?
Okay, before I toss that question to Vatsal, you see, Ananya, the purpose of PF is different from the purpose of mutual fund. I think there is a distinction between the two. I would let Vatsal take that forward.
Yeah, so obviously the purpose, as Murli sir is you're saying that it is different. So PF is for your long-term retirement corpus. What we believe is that a person has to balance the two. And if you have 15,000 in SIP and a 30,000 in PF, you are giving more weightage to single-digit return. So what you can do is you can probably equalize it. So either you reduce some amount and let your PF also grow, let your SIPs also grow till your retirement. And again, PF is more to get the ATC benefit. So if you're already getting your ATC benefit through other investments like your insurance products and everything, then I would suggest that it is not required also. You can keep the account open and then you just look at a pure mutual fund investment. So that's how we look at. Again, you should, when you are doing an SIP investment, you should always keep a goal in mind that you have 50 lakhs or 1 crore or after how many years, just a ballpark. So you don't have to be perfectly correct, but a ballpark figure you should have so that you can back calculate how much SIP, whether you are doing is the right amount or not.
Right. Ananya, I want to ask you one more question. I think that will be better. What is your objective? See, once you retire, are you looking at regular income based on the PF amount, or are you going to depend on pension? Because those questions have to be answered while planning for investments.
It has to be mix of both. I mean, pension in itself would not suffice. So obviously,
exactly. Yeah.
So
because see, PF offers stability. Please remember that one. Yeah.
Absolutely.
So you have to keep that in mind while reshuffling. And then take a call. Okay. All the best with your investments, and thanks for calling us, Ananya. The next question is Ankur from Rajasthan has mailed us his query. He's 31 years and he's currently investing through SIP of rupees 2,000 each in ABSL Frontline Equity L&T Emerging Business Fund. He's also investing 3,000 in Reliance Small Cap, 4,000 in MOSL Multi Cap Fund, and 5,500 in HDFC Mid Cap Opportunities Fund. He has a time horizon of 10 to 15 years and can increase his investment amount to 20,000.
Okay.
His question is, are my fund selections accurate? And if I need to increase the investment, which are the other funds?
Yeah. So the fund selection, Ankur, is a good fund selection. Though there are many funds now in the industry to actually see which is the best or not. You will have to keep reviewing it every 2 to 3 years. Along with your selection, I believe now there is a focused category as well, which is not there in your selection of funds. You can add a focused category fund, particularly Franklin India Focused Equity or IDFC Focused Equity. They don't move more consistently, but they will give a much better return because now the industry or the mutual fund, the markets are also become very selective, stock selective. So a focus fund will give you that flavor.
Right. The next query, let's move to Surat. Prem Kumar is on the line. Namaskar, Prem Kumar. What's your query?
Madam, sir, I am basically from Surat. My age is around 27. Prem Kumar from Surat.
Yeah.
Okay.
Sir, I want to start an investment plan ranging from 500. A lump sum figure means if I had 1,000, I can invest there. If I had 2,000, a monthly based investment, I have to start in such a manner.
Right.
I'm a beginner to this field.
Okay. So you want to invest regularly every month, or do you as and when you get the funds?
As and when I get the amount, basically more and less I will pay regularly. If suppose 1 or 2 months, if I don't have any money, so I can stop it.
Okay, understood. If you could help.
Yeah, Prem Kumar, very valid question for any new investor. So see, an SIP, if you pick a particular date, which you feel that you will have funds at that time, even if you miss out for 2 months, it's okay. If you miss out for 3 consecutive months, then the SIP will get stopped. Otherwise, it will continue. So that is one thing you can keep in mind. If you still feel that you will not have consistent money, then I would suggest you look at various online mutual fund accounts where, so that every time you do an additional purchase, you don't have to sign up a form. You select a good set of schemes and maybe 2 or maximum 3 schemes, and then every time you have money, you keep adding to those schemes as and when. So that is what you should do.
Does that answer your query?
Is it safe to invest in SIP? Because we as a small investors, we invest where we want our returns back in a safe mode. Is it safe to invest in SIP?
So there is statistics available which shows that over a 3-year period, an SIP never goes negative. There are periods when the SIP amount goes negative, but if you are investing for more than 3 years, in any period it has not gone negative. So if you have a 3-year perspective in mind, 3-year time horizon, then I think you are safe and you are good with it. So you should not worry. In fact, SIP is for retail investors
with small amounts of money.
Amounts.
In fact, to add to this point, see, basically there are 3 modes of investments one could look at. Insofar as safety is concerned, FD is the first choice, but the returns are lower there. The people generally tend to invest 1,000 rupees here, 2,000 rupees here in a stock directly. Mutual fund is definitely a better route because a fund manager is taking care of your funds. With small amounts you can't make money, you will end up losing money in the stock market. So as and when you have money, keep regularly investing over a longer period of time. You have the age advantage, you can do it over a longer period of time. Where do people lose money? They will lose money when they go and sell at the wrong time. So if you don't have that problem, you will not lose money, you will make money over a longer period of time. Okay. On that note, let's move to the next query. Ravi has mailed us this question from the US. He says that he is a citizen of USA and is interested in investing in mutual funds.
Right.
In the light of the limitations for US citizens, he is asking what are the avenues available for him to invest.
Right. So first of all, it's great that people from US are also
looking at
trying
mutual
to
funds
look
in
India. So there are 2 limitations for US citizens. One is the US owned mutual fund houses which are in India. There they are not allowed to invest because they have the same fund house over there as well.
Right.
So Franklin Templeton is not allowed, Principal is not allowed because they have a US body. But there are various pure Indian mutual fund houses which allow investments from US, Canada, elsewhere. So be it Reliance, UTI, Aditya Birla because it is a Canada parent, then Motilal Oswal. These are all pure Indian mutual fund houses and they have very good schemes as well. So he can definitely consider that. The avenues of how to invest is he will have to obviously contact and open an online investment account which is now available through various online platforms, and he will need some hand holding and a good advisor in place to actually start the investments. Through either through his bank or through his through a direct advisor or someone.
Right. Do we have time for one more query? Yes, I think we have some time. Vijay from New Delhi has made us this query. He wants to know what is better, investing through SIP in 4 diversified funds or in one large cap, small cap and hybrid funds.
Okay.
He has a time horizon of 5 years and his investment objective is to maximize returns.
Okay. So this question actually has a weight that there is no one solution that is good for everyone.
Which is good for everyone.
Yes.
Okay.
So again, what would be his requirement and what would be someone else's requirement? Both the solutions can be good. Diversified funds throughout would be more of a consistent behavior. Whereas one large cap, one small cap, and one hybrid would give returns in different time periods.
Correct.
Say like last 6 months only large caps have performed. So large cap returns are good. 2 years back only mid caps have performed. So mid cap returns were good. So if he's okay with this variable performance, ultimately it will end up giving him better return than
but wouldn't multi-cap be better for such people because that takes care of everything, right?
So a multi-cap fund now under the new categorization will allow him to play that and will get that benefit.
So in the new dispensation or the new categorization, a fund manager can invest in various large cap, small cap, mid cap in different proportions as the opportunities come. In fact, they will give more relatively higher returns compared to the fund managers. So it's better to select a good fund house with a good fund track record of a multi-cap fund. Do you want to recommend any particular multi-cap fund?
Particularly, so Kotak Standard multi-cap has been is a very good consistent multi-cap fund.
Okay, Kotak Standard Multi-Cap is one fund you can look at. I think we have run out of time. Vatsal, thank you so much for joining us and taking all the viewer queries. With that, it's a wrap on this edition of the Mutual Fund Guide. More news and updates coming up on the other side of the break. Stay tuned to BTVN.